Good morning and welcome to today's morning report analysis videos on Friday the 16th of June with me, Rich, market analyst. At Handtech Markets, we've got a relatively risk positive outlook to markets moving today. What we have got, let me show you initially, is this rebound across Forex majors. Euro higher, sterling higher. Interestingly, the yen is weaker quite strongly, and that sort of paints that picture of not only the improving risk outlook but also the BOJ that's announced today. No change in monetary policy. It's going to continue to sort of pursue the yield curve control and try to generate inflation through that. And subsequently, it's the yen is weaker against this improving dollar that we've seen in the last few days. But also, we've got equity markets which are higher across the board. FTSE mild underperformance, that could be down to a bit of sterling rally, but generally speaking, markets are pretty much positive. This comes as the dollar has rallied quite sharply in the wake of the Fed. Last couple of days in the Fed, since the Fed, the dollar has rallied, but it's mildly lower today as the sort of the market comes up to this 97.5 level, which has been sort of a bit of a key level previously. So that's interesting. On the dollar index, it's sort of just stalling that rally just in the near term, but generally speaking, we are seeing markets sort of moving more risk positively today. Oh yeah, one final aspect to show you is the oil price, which has bounced a touch. It continues to remain under pressure, but has bounced a touch early doors today as this improving risk outlook has taken off. Now, in terms of your economic outlook, economic data today, you've got the Eurozone inflation at 10 o'clock. That's expected to basically be confirmed at 1.4 and 0.9% in terms of headline and core inflation. And then into the afternoon, you've got the US data where the building permits and housing starts are at 1:30. No massive changes there, although it's ticking higher certainly on the housing starts, but generally speaking fairly sort of flat. And also Michigan sentiment 97.1 is around about where it was last month, which was 97.2, and 97.7 was the prelim data last month. Got revised lower to 97.2. So yeah, not a huge amount today, and the markets will be sort of continuing on from this risk positive theme that it's taken up overnight, following on from the S&P 500 and Wall Street, which sort of rallied after initially selling off quite sharply, rallied into the close, and that has been sort of reflected today. So my chance today is silver. Now, what we have seen in silver is these fib levels coming into play technically, but certainly the silver price has been under pressure since the Fed. But previously to that, it had been rolling over anyway and broke below that reaction low at 1696. And took it back to bang on that 23.6% fib level where it started to find support. These fib levels are consistent turning points quite often on this silver price. And the rally on Wednesday in the wake of this and the inflation data, certainly which put the dollar under pressure, pretty much hit that 50% fib level and turned away. The sell-off has found support at the 23.6% fib level, but also intraday yesterday pretty much turned lower at the 38.2% level. So these fib levels are sort of still seen as turning points on this silver price, and that needs to be considered. So if you get a close below that 23.6% fib level, arguably that reopens the lows at 16. Big figure area again, so 1643 initially supportive, but look at these momentum indicators which have turned over. MACD line is now crossing lower and sort of falling away. Stochastics negatively configured, RSI under 40. It all sort of paints a corrective picture, but that fib level 1664 is holding for now, and it'll be interesting to see this hourly chart, which looks corrective, doesn't it, with moving averages all falling. Momentum indicators generally negatively configured. Rallies are seen as a bit of a chance to sell now, having sort of broken below all these sort of supports that you had. Obviously Wednesday's volatility on the inflation data and then subsequently the FOMC sort of paint a bit of a paints a bit of a mixed picture, but generally speaking, you certainly say, having sort of lost this support of sort of late May, early June, market is sort of tending to sort of be seen as a selling to strength now. So it'll be interesting to see if that fib level does get broken. So I wish you good luck in your trading today, and I'll speak to you later. Thank you.